The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 7th Fantastic Friday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools, well, just simply tools that help each of us in order to lead an inspired life. Because leading an inspired life, folks, that truly is what it's all about. So let's go look at one of our tools. This is the tool I call a blessing in disguise. Now, have you ever been faced with a difficult situation that you just simply wish would just go away? I know I have, and it's more times than I would care to remember, or should I remember? I mean, I'm talking about experiences that were nothing more than a real pain in my rumpster, or better yet, something I tried so hard to figure out but just couldn't get it. You know, maybe it was a trade that I tried and tried again, but it just didn't work. I don't know about you, but when I take a moment to reflect on any of those experiences, when I finally, and I mean finally, push through, I can tell you that in reality, those experiences were really a blessing in disguise. Now, I remember reading a story about Abraham Lincoln. Well, actually a lot of stories, but this one story was when he was walking down a country road one day and he came upon a farmer who was plowing his field with a horse-drawn plow. And as Lincoln neared the farmer, he noticed a big horsefly that was bothering the horse. Lincoln started to brush the horsefly away, and the farmer stopped him and said, "Don't do that, my friend." That horsefly is the only thing keeping this old horse moving. Now, folks, the reason that I remember that story is because whenever I reflect upon situations I couldn't see the value of, or something that was really a nuisance to me, or something that I was tempted to just simply blow off or brush off, I'm reminded in hindsight, folks, that very situation really was a blessing in disguise. I'm convinced day after day, that one of life's most important truths when facing life's challenges is just simply your approach. And the approach, the incantation that I use is that this experience came to give me growth. And you know my feeling about growth. If you're not growing, that's right, you're dying out there. Folks, it is never about what happens to us in life. It is always about how we handle what has happened. It is so important for each of us to remember that you and I, we are greater than any problem, any condition, any experience, any situation that has been handed to us. They're just simply tests. All that we need to do is stare fear in the face and look into the eyes of doubt and say, this horsefly is really a blessing in disguise. Let's go check out the markets here. Let's go check out and see if we can find some blessings in disguise. We did get that bounce that I was referring to yesterday. It was a nice biggie. Will that continue? I say it's got a little bit more energy left in it. Right now we've got the Dow futures up about 50 points. S&P ES Mini trading at 1630. Its target is 1635. That's the minimum target out here in the S&P futures. We'll go take a look at that chart. NASDAQ is up about 10 points, trading at 29.59. U.S. dollar index, that's been up, down, all around. Same thing with the euro, the yen, all the currencies. We'll take a look at those. Gold right now, Goldilocks having a tough day on a Friday. And we all know what Uncle Tommy tells us about gold on a Friday. This could be a bad scene. It's off $21 right now, trading out at $13.95. Silver down 48 cents. That's trading at $22.22 out here. Light sweet crude, how about it? It's finally pulling back a bit here after running into resistance. It is down 70 cents right now, trading out at $94.08. Our call-in number is 877-927-6648. A quick peek around the globe here. We have the FTSE's up 29 points. That's a 0.5%. The DAX is up 42 points. That's a 0.5% as well. Asia was a little bit of a bloodbath last night. You had the Hang Seng finish down 263 points. That was off 1%. You have the Shanghai. That was down 32 points, 1.5%. And the old Nikkei finished down only 26 points after hitting a much lower low last evening. So we'll take a look at those stock charts. First, though, let's start off with the ES. Now, it is Jobs Friday, and so Jobs Friday can be a bit volatile, but you would think that at least this week here and part of last week, it's been pretty volatile weeks. You know, I didn't really measure the distance in the between the actual low and the high of yesterday inside the Dow futures, but probably about 180, 200 points, something along those lines. Let's go see how the market here is responding. Now, I know yesterday that call that I made was that we were going to see a bounce. It was going to be a significant bounce in the markets. That's really what we're seeing now. It was because of a number of factors. I won't go into each of those. If you'd like to understand all those factors, though, just go sign up for my newsletter and go take a look at today's or yesterday's archive, because what you will do, I guarantee you this, you will absolutely learn something. There'll be some tools that you'll be able to put in your arsenal. You'll be able to use those tools to understand what the market is really communicating to us. Right now, what the market wants to do, it's in between the floors. We're looking at the 30-minute chart of the ES Mini, the real EKG of the marketplace out here. We can see that the ES Mini moving up towards that overbought condition. It can move just a bit higher here, and it wants to at least go tag the 1635 area. What do we have at 1635-ish? Well, we've got the descending price channel that the ES Mini has been traveling in. We've got sweet 786. Yeah, there's sweet 618, and there's also sweet 786. That is the next floor in the Fibonacci summation sequence series out here. Now, that descending price channel, that's really coming off of the highs that were established back in May 27th. We're still, May. We're in June. What am I talking about? May 22nd out there. And so you can see, if you're watching us on TigerTV, what you're seeing is you're seeing two red declining lines out there. That's really the price channel. That's what price has been traveling within. And you're also now seeing, coming off of the last swing point, the swing point that was created out here at 11 in the morning on June the 4th. That high was 1645.75, all the way down to the bottom of that morning star where the bounce really began. The low came in at 1230, out at 1596.50. We got the reversal signal right here at 1:30 in the afternoon, and that was our morning star candle. As soon as we got up above the body of that 1230 candle, that open there was 1606.25. That's what gave us that clear sailing that the bounce was in fact underway, and that's what we really saw going into the closeout here. Now what we can take a look at is after the jobs numbers. Let's look at the 30-minute chart. You can see during that first 30 minutes, 8:30 to 9, 206,000 contracts inside the ES Mini. And if you go all the way over to the right-hand side where we can take a look at where price was traveling into the 130 time frame, that had 125,000 contracts. So you had volume coming into that. That says that it certainly wants to test the high of this 30 minutes. It's already done that. That was out at 1633.25, but no reason for it to not go tag and how about that? tag and test that 1635 area. If it can bust through that, and now here is the real key. What I want you to be paying attention to and looking at on the ES Mini 30-minute, I want you to take a look at that green squiggly line out here. That is the 200-period exponential moving average. That area has acted as really a resistance point ever since about 2 in the afternoon on May 31st. So for the last 6-7 days out here, I'm not exactly sure how many trading sessions, 5 trading sessions or so, that area has acted as a resistance point. You are above it. You're well above it here right now. And unless you close below that today, now you start to get below that today, then you could start jumping on the short side out there. But otherwise, 1635, can the market run higher? It most certainly can. Where could it actually run to? What would be ideal today? Well, just like I mentioned yesterday that we were going to see a big bounce, the time to actually sell, that's if we get handed a nice, real nice present out here in the marketplace, would be with the ES Mini actually moving up into about the 1650 area. Now, that's 20 points higher. I don't necessarily expect that today, but you never know. Why do I say 1650? Well, I say 1650, and we'll know today when this price channel gets hit, because if you get a break above that, that will set up that possibility. Now, here is the 120-minute chart. It's just much easier. Oh, by the way, yesterday, as the market was making a slow in the ES, it was making a perfect 0.618 Gartley buy pattern. So you had that going for us as well out here. If you go from the highs back here on May the 22nd all the way down to yesterday's low, what's important to be paying attention to is the 1630 area. You close above 1630 in the futures, that sets up a rise to the next level. That next level is 1651. That is the 0.618 retracement. That would be a beautiful move. That would be the time that you would want to jump all aboard to the short side, because there has not been a change in trend because of the bounce yesterday. That trend is still to the downside. We are making lower highs. We are making lower lows out here, and it would be a beautiful thing to get all the way up into 1651. So that's what you want to be paying attention to. You can see on the 120-minute chart here, I also have that relative strength indicator out here. You can see that has much more room to go before it gets to the overbought condition in the marketplace, and so we'll be paying attention to 1630.50. Now, let's go take a look at some of the other. Let's go take a look at Goldilocks and silver, because that has had a fairly significant move. Already down $29 here right now, trading at $13.87. So it is back inside the lower part of the range. The lower part of that range is nothing more than that swing point of April the 16th out here. And April 16th, that low is $13.21.50. That is what we're looking for to finally get a test of. We'll see if that takes place out there in the marketplace, but gold back inside the lower part of its range. Silver, silver really hasn't done a whole heck of a lot. Here is the weekly chart of silver. So we're going to end the week today, obviously, and if we take a look at this, what you are seeing is 3 real small-bodied candles. Now, seeing those really 3 small-bodied candles, that's actually a positive thing, because it's sort of like the market has kind of lost direction out here. And so we did have silver make that 1.618 butterfly down to 20.28. Maybe we're just waiting for Goldilocks to go test its lows out there. And then it could be ignition, NASA takeoff to the moon. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Yesterday we were taking a look at the U.S. dollar index, gold and silver, and yesterday the U.S. dollar index was getting just absolutely waxed out here. Now, the area that did hold, we had I believe it was Dan down in Miami that had called, and we were taking a look at the November 16th swing point high, 81.51 out there, and it said that really was the old line of, it used to be an old line of support, then it became an area of resistance, now it's back to support. If we take a look at where the U.S. dollar index actually finished out yesterday, it finished at 81.52, so right there on the line, you can see that area was tested again this morning, but the whole point was with the U.S. dollar index being down so hard yesterday, and gold really just budged a bit. It is not difficult. It's not difficult to understand why gold is now back about $34 here with just a slight move in the U.S. dollar index. But let's go take a look at these other currencies out here. Let's start off by taking a look at the U.S. dollar Japanese yen currency pair out here now. It's staging a comeback, which it should. If we just simply take a look at, this is the cool thing about using the relative strength indicator out here. There's all kinds of indicators, and in any event, if you just simply use this is one that I think is just a priceless tool out here. And if we were taking a look here at the because it works on everything, and if we take a look at the U.S. dollar Japanese yen, take a look at the relative weakness area where it got down to here early this morning. In fact, earlier this morning it was touching basically about the 30 level. That's really the area where you start to get into an oversold condition out here inside the marketplace. And in fact, the U.S. dollar Japanese yen, in order to go back and find the last time that it reached that level on the relative strength indicator, we have to come all the way back here to where the U.S. dollar Japanese yen actually made its low. September 13th, well, not its low, but as we take a look at my chart here, the last time it got down to that level was September 13th, 2012 out there, and then it was off to the races for it. So we'll see what kind of candle forms out here today in the U.S. dollar Japanese yen. It's doing what it should be doing just simply by utilizing the relative strength indicator. Well, also, we can take a look at retracement. So as we do that here, if we take a look at the retracement, coming off of the last time where we saw any kind of very significant bullish move, and you can take a look at that by just looking at the wide-ranging bar candle from April the 4th. Remember, inside the currency market, we have no volume out here. So what you really have to rely upon truly is the candles. You got to be paying attention to candles and what they mean, as well as your different Fibonacci expansion, contraction patterns out here. So we can see that as the market was pulling down this morning, coming into the last area, last sign of strength, the last breakout area inside the U.S. dollar Japanese yen. If we go from the low out here at 92.55 all the way up to the high that came in on May 22nd, what you will see is basically what? Let me darken it up for you a bit here. That's right. Sweet 786. The 786 retracement level, folks, $94.94 out here, and it got down to a low of $94.97. That's coming off that high of 103. You got to really love using these tools out here, and these tools being the retracements, these tools being about taking a look at price moving into the last sign of strength, and also getting down to a area where you really saw a move on the U.S. dollar Japanese yen out here. Is this all that we're going to see? Is this the only retracement out here? Well, the trend on this thing really has not been broken. What you can expect, though, you can expect a bounce. And if our market closes positively out here today, and with the yen doing what it's doing, let's go take a look at the Nikkei out here. Let's go see what the Nikkei did last night. It did close down a bit, and in fact, if you take a look at the Nikkei, in 12 trading days, folks, it took back 21.3%. It made a 21.3% move. Now, what the Nikkei did was this came back. I remember we were talking with Mark in Colorado about this, because I know he was looking to play a long play on this, and the suggestion was wait for the Nikkei to get back to this open gap here, because that really is a sign of strength. I don't have volume, unfortunately. I don't get the volume feed on the Nikkei, but if we just took a look at candles, if we just took a look at gaps out here, you would see on the Nikkei the April 4th area, that high, 12,634, and then the very next session, which is April the 5th, a nice little gap up there. And that gap here, with that nice bar that you had on the session before on April the 4th, and as well take a look at the Nikkei, just like we were looking at inside the U.S. dollar Japanese yen out here, that's moved down to the lowest level on that relative strength indicator all the way back to October 15th of 2012, where it really truly took off to the moon out here. So there should be a nice little bounce that takes place inside the Nikkei. It'll only be, most likely only be, a counter trend bounce, setting up the C point of a very large A to B equals CD down. Exactly what we are going to see in our marketplace. But all that, folks, that could take till maybe Tuesday of next week. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 75 points. Trading out at 15,115. S&P's up 9 at 1631. Composite up 12 at 3436. Russell 2000 up 4.5 points out at 984. You've got Google's up $5 and change. Apple's down $3 and change. Microsoft up 19 ticks. Intel, we'll take a look at that Intel chart. It is back 38 cents right now, off 1.5% out here. Moving to the upside, Google leading the charge. Celgene, CELG up 270 right now. Amazon up a couple of bucks. Goldman Sachs up 220. You've got GameStop Corp up 238. That's up 7%. Abercrombie and Fitch up $2. That's up 4%. Monsanto, MON, up $1.79. Yum Brands up again today, up $1.70 as well. To the downside, Equinix, EQIX leading the charge here, down $12 off 6%. Iron Mountain apparently losing a lot of its iron strength here, off $6 and change. That would be a 17% decline out there. Oil States International, OIS, off about 6%. Apple down 447. Lamar advertised Nelly, MR, off 7% this morning. Copart Inc. Off 850. First SEC Group, what the heck is this? Maybe this is a IPO. Let's see here. Yeah, IPO, so we'll skip right over that. TiVo, that's off 17%. That's down $2.40. Our call number is 877-927-6648. Let's take a look here at bonds, see what bonds are doing now. You've got the contract here. We've switched over into the September contract. That is down so far this morning with 303,000 contracts. That is going into, though, the swing point from May 29th out there, and that's got 886,000 contracts. So you've got bonds are pulling back on lighter volume out here. Let's go take a look at, what did we not take a look at here yet? Hey, let's go take a look at the ETFs. Let's go see what they were doing yesterday. So we'll take a look here at the Dow Diamonds. Let's start off with the Diamonds. Now, yesterday as we were doing the show, what we were really paying attention to was that gap from May 3rd, the gap between May 2nd and May 3rd. And in the case of the Dow Diamonds, the bottom of that May 3rd session, 149.20. Yesterday was a test of that area. Now it was a test with major volume, 15 million shares versus the gap up, that little sign of strength of 5.9 million shares. So you've got volume that is pushing to the downside. You know, what we are seeing in the marketplace here right now is a counter trend, is the B to a C of an A to B equals CD down, very close to that 1635-ish level. As we switch, I'll switch back over. I'll go back and forth. Let's go back and take a look at that 30-minute chart inside the E-mini so you can see just really how close we are into that 1635. So far, the high's been 1633.50. So now it's going to be important to be watching these candles. Right now, what's forming is a bearish engulfing candle, as well as that 200-period exponential moving average, which right now is at a level of about 1624. And all we're doing is we're paying attention to what the market is giving us, the message of the markets. We know we're in an overbought condition, so this has to be worked off. And so what that means is a real false move to the upside is going to be getting back below that 200-period exponential moving average, just as it has done here the last two breaks of this area, which was back in May 31st out here. You can see it was a break of that area, got back below, and then started moving lower. The same thing took place back here during June the 4th time frame. So that's really all. You've got everything set up to be watching and be paying attention to today to understand whether this wants to move higher into possibly that C point, which was, I think, around 1645, 1650 or so on that 120-minute chart, or whether this is the extent of the move out. So the parameters, in my opinion, as I take a look at it, are very clear out here, so it becomes very easy to watch what it is that we are looking for. Now, let's go take a look at some of these stocks here that are popping and dropping in the marketplace. Let's look at the ones dropping here specifically. EQIX is the ticker symbol. They are the leader in the doghouse to the downside here right now. And so let's go see why did that. I guess I probably typed in the wrong symbol. So if you do that, my charting system's not intuitive enough to give me what I really intended to type, but there we go. So now let's go take a look at this, and then we can switch back actually to the ETFs as well. We've got about 10 minutes in this section here, but what we are looking at is this has broken, is gapped down. It's now this thing here, this could be dangerous. Let's take a look at it. The swing point that it just broke here this morning is June 4th. That only has 1.9 million shares. We've only been trading for 9 minutes, and it's already done 1.9 million shares. So it's busting through a swing point with big volume out here. So let's pull this back a bit. Let me get a couple of things off of the screen. Let's get it all off of here. There we go. And we'll start from Scratcheroony. There we go. So now let's take a look at this and see where this is, see if we can find any volume bars out here. And the last time we saw a volume bar, it was a little head fake out here. So we're not into that. Looks like what this wants to do, this volume bar right here, is probably where it is headed to, which is the breakout session of April 26, 2012. And that area is going to be anywhere from a price range of 172.44 down to the lows of about 147. Now let's take a look and see what the A to B equals CD down is inside this equity that this is looks to be setting up here. It's going to be more than that for sure. As we come back, 167. So let me pull this back. 167 would be, let's see where that volume bar is again. So 167, yeah. So that's where this equity is certainly headed to. That real breakout session that it had back in the April of 2012 time frame, and that is on what is it called, Equinix out here. Off about 7% this morning with volume. Let's go take a look at Iron Mountain, because that thing is also down hard. Let's go see what kind of volume is behind this. IRM is its ticker symbol. Oh, my goodness. Take a look at the volume coming out of this thing. This is big volume coming out of it. Now, let's see. I don't know what the news was behind it. Let's not worry about what the news is. Let's go take a look at the stock chart. So here's an equity that's coming back to its breakout session. Unfortunately, it is not coming back the way that you want to see an equity come back to a breakout session. This thing broke out. Nice big volume on it, June 7, 2012. 5 million shares to the upside. That gap is open right now. It looks like what's going to be tested today is the bottom of the gap. Now, when I'm saying the bottom of the gap, I'm referring to the actual breakout candle, which was June 6th low of 27.39. You get below that, you close below that, it's going to come all the way back down to the bottom, which I suspect is what it wants to do, which is in the $24.17 range. But volume-wise today, again, only trading for 11 minutes, and to the downside, you've got 4.2 million shares going against a breakout for the entire day of 11 million shares. So this thing has got some trouble inside of it. Let's take a look at the next chart up here on the screen. Let's see. What else do we have bopping to the downside? We've got Copart. CPRT is the ticker symbol. CPRT. Let's go see what this is doing. Also gapping down. So let's take a look at this. Let's see what the volume we've got inside this. Give me a moment to pull this back out here. CPRT. So gapping down this morning, coming in. Now this thing had, give me a moment, come on, pull, there we go. So this thing had a nice, well, this had a high volume high that was tested. So the work to the upside actually on this equity here was complete. On January 31st, folks, this thing had really wide price spread. Went from a low of 33.68, and this was at the highs. Went from a low of 33.68 all the way up to 37.47. Closed out the session at 35.91. Volume on that trading session day, 5.5 million shares. This area here was tested on May 17th, 1.5 million shares. It closed above it and got right back below that area on the very next trading session out here. You then saw a real sign of selling out here. In fact, it was not really the first sign of institutional selling. There was a sign of institutional selling back here on February 28th, 2013, when you saw 3.5 million shares to the downside. But then most recently, just a few trading sessions ago on May 31st, you saw another 4 million shares to the downside. Now what this has done is this is trading below, well, it's trading right at the set of swing points out here. One from March the 11th, the other from April the 18th. That level is $32. You're trading at 32.06 right now. So you've got volume-wise today so far, 882,000 contracts. That swing point that it's trading into only has 1 million shares out there. So this could be some problem here for Copart. Otherwise, the stock chart, look at this. I pulled this back further. When that high, how about this? So let's put this on the weekly chart. It'll be a little bit easier to take a look at. It does help to always go back to the left-hand side of the chart out here. When this thing was making that big move up on in February the 1st out here, the volume there on the weekly was 10 million shares. Well, let me just refresh this chart. Can this be real? My goodness, what did this thing do? Okay, there we go. Now that I take that back. I digress out here. Don't know why my charting package did that. So let's just we'll just simply reverse all of that altogether. Now this is interesting. So now I've got a data feed issue. So that's why it did what it did. Well, this is going to be an interesting 5 minutes out here. Okay. So here's what we're going to do, folks, because I actually have lost my data feed for some reason. So what we're going to do here until that simply comes back online, going to just go over and we're going to go back and take a look at the ETFs out here. So I'm not going to be able to give you a live feed data, unfortunately. But what we can do is let's take a look at what happened yesterday out here. So as we take a look at what happened yesterday, again, back on the diamonds, it came back into the gap up, and that thing held. Even though it came down with volume, says pressure is to the downside. We will be back down there as soon as the C point is complete inside the Dow diamonds. So that is a strong area of support out here. That that being the low of May 3rd. Right now, that gap up area, because it did hold even with volume pushing down into it. If we take a look at the other ETFs out here, probably I'll just talk slower. That will help me to defray some of the time out here. Hopefully everybody has me out there. I would hope that that's just some other data feed. Otherwise, I'm just really talking to myself, which I do all the time anyways. Now, let's take a look here. I get a confirmation here from Al. Do you have me? Okay. Yeah, he's got me. Okay, great. So now let's take a look here at the SPYs. So the SPYs doing the same thing. The SPYs had gapped up on May 3rd. That volume was 144 million shares. The low of that was 161.04. And yesterday came down, big volume, 200 million shares, but that area held. So it sets up a strong area of support. That area gets tested on two more occasions. Well, let's see. The level on June 5th, the low was 161.13. I believe it stopped just below that, yeah, because it was 161.04. If this area gets tested a few times, and now here's the interesting thing, because, to a certain extent, what was set up yesterday, if you take a look at the SPYs, if you take a look at all of the ETFs yesterday, set up the B point of an A to B equals CD down, and that B point has got substantial volume. So, yes, the pressure is to the downside. Your A point is certainly going to be your May 22nd high out there at 169.07, but your B point in the A to B equals CD down is now yesterday's low. That's got 200 million shares, so it's going to need some big energy to push down. So quite frankly, today's not the day from a bearish standpoint that you want to see. From a bullish standpoint, you'd love to see it go down there somehow and test 160.25 and reject that area on lighter volume and close back above the May 3rd low, which would be 161.04 out here. So from a bearish standpoint, you actually like to see on a Friday, you like to see the markets move or drift higher out here, and continue to do that on a lighter volume, because it's going to need to really recharge its batteries in order to take out that B point from yesterday. Again, 200 million shares out there. Let's go take a look at the Qs out here. The Qs really the same thing, except the Qs here set up a hammer candle yesterday as it came into an area of support. Now, came in, big volume, 62 million shares. That's 62 million shares going against the gap up of 34 million shares, but it still held. It's why these gaps can be so helpful in understanding and setting up areas of support and resistance out here. So as you take a look at that, support, no question about it, is that 71.91 is the low from May 3rd out here. That is now the new B point. Now, the cool thing about the Qs here, because as you know, when you break a hammer, right? If you're long, you're wrong out here. And you're going to want to certainly see volume of more than 62 million shares as that point gets passed out here. Now, where could this really bounce to inside the Qs? Well, if we just simply go, see if I can get this to work here, from the top, yeah, we can, from the top to yesterday's low, 72.80 is the 0.382 level. So 73.62 is really, that's a 0.618. That's what's in play. What is really in play, and heck, for all I know, it could be hitting it right now, because I don't have a feed, is really the low of May 22nd. And that's where I believe all of these markets want to at least trade up to, is the low of May 22nd, at least on the ETF structures, and that's 73.24. So the range that you're looking at to set up the C point is going to be 73.24 to 73.62. And taking a look at today's volume will be helpful to understand if the C point has been formed out here. So that is on the Qs. Let's go check out the IWM. As we take a look at the IWM, yesterday, it did not make it bound down to its May 3rd gap. And that said that actually the IWM yesterday, we pointed this out, it actually, which has been the weak link, was actually stronger, the strongest of all four ETF structures out there. 877-927-6648. We get back. I'll see if I can get this thing back up and running. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks, and back up and running. That is always a good thing, and absolutely stay tuned for the Nadex Bull Bear Binary Option Hour up next at a request in the den to take a look at the IYR. That is the iShares real estate, Dow Jones U.S. real estate trust out there. Now, I believe the number one holding in there, it might be Simon Property Group. Yeah, I think Simon Property Group is like about 8% or so. American Tower, as I recall, Public Storage, Prologic, Logis, something like that. I think that may make up the top 4 or 5 equities out here. But let's take a look at the actual ETF itself and see what it has done. Now, this thing here had a big key reversal session, just as the market did on May 22nd. Now, the volume out there was 26 million shares, so it did make a high with volume out here. And that's really what all of the ETFs did as well. But if we take a look at this, you can see how this thing, after that key reversal session, moved back post-haste, went from a high out there of 76.21 to the low that was put in yesterday at 67.02, 21 million shares. Now, let's take a look at, now there's a couple of things. We can take a look at what it did at the high out here at the top. That was a key reversal session. And a key reversal, you really need three things to take place. Number one, a key reversal session is going to come when the market is extended. One of the easiest ways to determine that is just simply use the relative strength indicator. You're in the 70 range, you're above 70. That's considered an extended condition. So that's an easy one. Then you don't have to be paying attention to expansion patterns A to B equals CD or expansions of swing points out there. And you can see here on the prior session, which was May 21st, the RSI was up at 73.55. That makes a qualification number one. Number two, what you've got to do is the market has to exceed both the high and the low intraday. Well, that was an easy thing to do with such a small-bodied candle on the 21st. Well, it got condition number two. And number three, it just needs to close in the opposite direction of the move out here. Well, you've got a key reversal session on May 22nd. And what do we have here yesterday? You also have a key reversal session. Yesterday, both the low, intraday low and high was exceeded off the prior candle. You closed in the opposite direction. And if you take a look at yesterday's RSI reading, you've got a low of 22.5. So you've got a key reversal session going on inside the IYR. So if this market bounces, and this does have volume to the downside, you can see volume continue to accelerate all the way down. The question was, is this a good short, and the approximate spot of where this thing might be able to bounce to? And you kind of, I think, you play the IYR probably with the general market. And I think we pay attention to that May 22nd set of swing points in the ETF structures. If you close inside a swing point, in this case here, we'll just use this as the example. If you're to close inside May 22nd, because you got 26 million to the upside, it always says you can go test the highs out here. So it's going to be very key today to watch, in my opinion, to watch assuming that there's not just a quick reversal in the marketplace, and is to watch what happens inside that May 22nd swing point. Because anything that closes inside there says it can go test the high. So where can this bounce to? 70.53 for sure. Maybe it gets up to 72.20, and it gets down up to the high of May 23rd, which is so close to that May 22nd swing point. I think on the IYR, the best way to play this is to, number one, go take a look at Simon Property Group, SPG, American Tower, HCP, Public Storage, and Ventus. I believe that that's going to represent a substantial portion of the IYR, and to see what each of those are doing. Just like XOM, if you are playing the DUG or DIG, you've got to make sure that you're paying attention to the weightings, to the stocks inside that. Well, folks, I seem to have made it through this session, even though I've got some data feed and computer problems. It is Friday. Have a fantastic weekend, and always remember, folks, you have an amazing power, and that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great weekend. I look forward to seeing you on Monday. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.